And we're live. Hey, Alison.
Hey Chris, how's it going?
Pretty good. It's August, just the 1st of August. The sun is shining.
Yeah,
It's a Friday. I'm wearing my favorite Hawaiian shirt. Uh,
you look
yeah.
very smart.
I'm not sure smart is the word my mother would use, but it makes me but it makes me feel happy in the sunshine. So yeah, so we're technically on break from the podcast. But Eric's on holiday, and it's been a hell of a week. And so we thought we'd jump in and do a quick live stream just to discuss, what's been going on this week.
Yeah, absolutely. I mean, yeah, as you said, it's been a very busy week. We saw the S&P up 2.3% in July alone, and the Nasdaq up 4.5%, which is
Hmm.
crazy. And believe it or not, we've hit our 15th all-time high since the beginning of the year. Yeah, so this is truly unheard of times. But we saw some very interesting data today. So
Yeah,
I don't know if you want to jump into that.
yeah, we're going to jump into that, and then we also had the interest rate decision from the United States on Wednesday, and then
Yes,
over it all around it, this big amorphous blob, is the tariffs.
yes.
Donald Trump's trade war against the rest of the world. So we're going to go through all of this. But yeah, there's only one place really to start today, Alison. That's something you alluded to, and that's the NFP, um,
Yes,
which just came out, an hour and a half ago now.
it did. Yeah, so the expectation was 110,000 jobs added in July, but it only got 73,000. So
Mm,
we have seen a huge market reaction. But what we've also found is they downwardly revised the last 2 months by 250,000 jobs.
yeah,
So it basically means that, the job market is really suffering in the States.
yeah,
Of course,
and has been since May. Yeah, scary stuff. Uh, yeah, and as you can imagine, markets have not reacted well, have they?
no, no. We saw a huge downturn. I don't know if you can share the Euro USD. It was,
Yeah,
is that Euro?
the euro's
Up,
gone up hugely.
yeah.
Uh,
DXY down,
Dollars jumped off a cliff.
hmm
S&P 500
gapped.
gapped down. Nasdaq gapped down. Yeah, this is bad news bears for the United States
Yep.
and for the world, really,
Yeah.
because it shows that the economy of the United States has been driving global growth is in much weaker position than we thought. And this, of course, I mean, has led to changes in interest rate expectations after we're going to talk more about the FOMC in a little bit, but after the decision on Wednesday to keep rates steady, and Jay Powell was very hawkish in his tone, um, futures traders were pricing in only a 40% chance of a rate cut in September, and that has turned on its head.
Yeah. Crazy.
Yeah,
Unbelievable.
we're now seeing chances of a 70% rate cut,
It just
and
shows you how quickly sentiment can change, hey?
yeah, and
Yeah.
especially now, I mean, everything's so data driven, and everything's a bit chaotic as well.
Yeah.
Uh, yeah, it's pretty weird stuff happening right now. But yeah, I mean, so where does this leave us? I mean, probably continued weakness for the dollar, I would imagine.
Yeah, I would say so. I mean, what the decline in jobs mean is that basically that they're going to have to, as you saw, they're going to have to reduce interest rates much quicker than they previously thought. So I
Hmm.
wonder what Jay Powell's thinking, seeing this data. It must be quite stressful for him to deal with, especially since he's been so, I mean, rightly so bullheaded about keeping interest rates up. And we've got these two dissenting, Fed governors who now look like as superstars.
Yeah,
uh,
yeah,
yeah,
absolutely, they do. Yeah, Bowman and Waller, who
yeah,
yeah, and there's Jay Powell trying to be the adult in the room, and it turns out he was wrong.
yeah,
And yeah, as you say, he's under so much pressure from Trump at the moment. to lower interest
Yes.
rates. Yeah, it makes you wonder what's going on. I'd love to be a fly on the wall in the
Yeah.
Federal Reserve at the moment.
And I
Um,
think also another interesting point here, and data we were looking at earlier, is GDP up at
yes,
3%
yeah,
compared to minus 0.5% the month before. Um, so that also says something. It's just so mixed. It's very difficult to make a decision.
yeah, it is. And and the jobs reports earlier in the week, the JOLTs came through. They looked okay. As you say, GDP growth looked okay. We saw inflation come through, and it was a bit higher than where the Fed wants it to be, with some warning signals in there as well about inflation, which
Yeah,
we'll
I think
we'll
it was at
talk.
2.7 versus the 2 that they were hoping for. Hey?
Yeah, it came in a bit higher, and so yeah, Jay Powell looked like who's doing the right thing, keeping interest rates on hold. But now, and as Christopher Waller said, um, he did say that when labor markets turn, they turn quick,
Mm.
and you don't want to be lagging behind it. And right now, it's become very clear that the Federal Reserve is lagging behind the change in employment in the United States.
Mm.
So yeah, well, let's see what happens. But I mean, we've got a few other things to talk about this week. Do you wanna get into earnings and before we saw all this chaos?
Yeah, I think so. We just want to talk about basically the Magnificent Seven and the effect they've had on the markets of late. Everybody is, obviously been aware, as I said earlier, that we've had 15 new all-time highs since the beginning of the year. And, we had this huge downturn in April with the announcement of the tariffs, which obviously got postponed. And now we're feeling, well, actually today, a lot of them kicked in. But the Magnificent Seven released their earnings over the last 2 weeks. So obviously, last week we had Nvidia, and they were up 122%. They are the backbone of AI.
Yep.
Um, and yeah, I think they had a new all-time high market cap of 4 trillion as well. So that obviously sent markets up. Um, and we had the same with Meta, which was unexpected, 21% up. Microsoft as well. And you can see these all have AI strength. They all have AI backing them. So
Yep.
AI is definitely the driver of these markets. Amazon was up, but they are a little bit more uncertain about what the future holds. So they didn't they didn't perform quite as well as the rest of them. Alphabet was up, that's Google, and of course you look at Tesla. That was unexpected. I thought it would be actually lower. So
Yes. No, I agree with you. I thought it would be
um,
lower than that. Yeah.
yeah, I mean, if you look at how much they've dropped, their stock prices dropped since the beginning of the year. It's not bad. It shows quite a lot of resilience, actually. Yeah, and then we look at Apple, and that 10% growth is basically due to iPhones.
Yeah.
So yeah, again, let's see what happens with Apple. But I just want to mention that these seven, companies are basically make up 33% of the S&P,
Yep.
and they make up 44.5% of the NASDAQ. So it means that any weakness in even one of these companies can send these indices, absolutely tumbling. Um, and so it makes it quite vulnerable to be relying on a handful of companies to keep the economy going, basically. It's
Yeah.
quite
No,
scary.
it is scary. Yeah. There's so much money poured into a very concentrated sector of the stock market. Um, but as you said, like I mean, the Nasdaq until today, was up. The S&P was up until today.
Yeah.
Um, yeah, so it's all been pretty rosy, but you do say, as you mentioned there is issues with this kind of concentration of earnings, and it's not
Yes.
just that. I mean, there are underlying fundamental weaknesses in the U.S. economy, and there's this article written in the FT this week by Mohammed El Arian, who's an excellent commentator, very wise man, and he pointed out that what we're looking at here in terms of valuations, that we are close to dot-com levels of valuations in the
Yeah.
dot-com boom. So we can see here, that this is the actual dot-com boom, the peak in 2000, before everything went pear-shaped. And, we're getting pretty close now. We're getting pretty close to that level. And there's a lot of people arguing that this time it's different. And you mentioned AI there, that all these companies are AI. And that, this time, because it's AI, it's exceptional. And that really reminds me, I mean, I'm old enough to remember the dot-com boom and bust. And I remember very much at the time people saying the same thing. Oh, it's different. It's the internet. It's going to change everything. That's why
Yes.
these valuations are so high. And it really reminds me of that as well. So, you know, yes, the trend is upwards. Yes, there's a lot of exuberance in the market about AI. A lot of people are really excited about tech, but there are underlying fundamentals, and there are a lot of negative forces in this market right now. There's tariffs, which we're going to come on to shortly. Um, there's weakness, as we just saw, underlying weakness in the American economy, in the U.S. economy. There's underlying weakness in the global economy. We're still coming out of a relatively high inflation period, and consumer sentiment is down. So I think, with these markets, I mean, you can tell me if I'm wrong, Alison, but I mean, with these stocks, I mean, sure, ride the trend, but just be careful, right?
Yeah, absolutely. I mean, that's what a lot of, that is kind of the prevailing advice from a lot of investors
Hmm.
is ride the trend. Don't try and predict what's going to happen and when it's going to happen. I mean, maybe it gets to 44 and it doesn't burst, I don't know. But you need to, yeah, just proceed with caution is all I can
Proceed,
say.
absolutely,
Yeah.
absolutely proceed with caution.
I,
And I
you know,
think, yeah, go on.
yeah. No, I was going to say something about what happened when that news leaked out of the White House, and it really spooked investors, where it was leaked that Trump was going to fire Powell,
Yeah.
and and the markets just tumbled, and
Yes.
then it
There,
was, well, then somebody said no, nobody said that, that is
of course they
completely
wouldn't.
untrue.
They wouldn't say that. Nobody would say that in the Trump
And
White House.
with that, yeah, you saw just the markets sort of rebound. So
Yeah.
I
Well,
guess
let's.
maybe they were testing. Maybe they were testing to see what would happen.
Yeah, and let's move. That's a nice segue actually. Let's move on to Jay Powell, because we did have the interest rate decision midweek, which we've touched on briefly. The U.S. Federal Reserve decided, the FOMC, the committee, decided to hold rates
Yes.
steady, which is now looking, as we discussed, like a bad decision. Um, and you mentioned there the pressure that Jay Powell is under from the Trump administration. Um, and I think what was interesting is not that Powell, not that I keep on saying like it was his decision, not that the governors decided to hold rates steady. That was pretty much a given Jay Powell's previous comments. But what was interesting here was something we touched on again was the two dissenters, Bowman and Waller. I think this is
Yes.
the first time that we've had two dissenters. Um, they both wanted to lower rates.
Hmm.
And, there's some speculation that they're both applying for Jay Powell's job, um, showing in a very public way to Donald Trump that they would be more friendly to a lower interest rate environment. Um, but given the NFP we've just seen, maybe they weren't. Maybe they're actually geniuses. Maybe they're, there's nothing to do with applying for Powell's job, but more to do with serious care for the economy. Um,
Yeah.
but you mentioned that, yes. So there's a lot of pressure on Powell, and that's only going to increase now after this.
Mm.
We've talked about how the market responded when those rumors that Trump wanted to remove Powell, and just this week, the head of PIMCO, which is one of the largest holders of U.S. debt, has come out and said that there will probably be a market revolt
Yes.
if Trump revokes or gets involved in the Fed's independence. So and as you know, but Trump, he doesn't give up. He's taken a different tack, and he's now decided that the overspending on the Federal Reserve's renovation of their office building is Jay Powell's fault. And so, while he might not be able to just remove him from position because he doesn't like his stance on interest rates, maybe he can remove him for negligence or fraud when it comes to.
Yes.
But how would markets respond to this? Even would they see it? They see it for what it is: a trumped up, pardon the pun, a trumped up um, excuse removing power, or and would they let it slide, or would they just let it slide, and would they be happy with it? But it is something certainly to keep an eye on. As you said, like on Wednesday this week, when they kept interest rates on hold, the chances of a September rate cut were quite low. But now with the NFP, as we saw, we're looking at 70%. But this is seesawed back and forth so many times now. And,
Yeah.
and as I said, we were talking about this earlier, Alison, and I don't trust this at all. you know, this could this could go back the other way very quickly.
Yeah, I guess we're going to have to just wait and see. Everybody's sort of been waiting and seeing since the beginning of the year, I think. But
Yeah,
this
yeah,
is really you. I think also we're going to start seeing now more so the effect of the tariffs.
yeah.
We actually had a question here. Why is the Dow Jones by triple RGS by Dr. M square? So um, why are Dow Jones futures down around 1.5% today? I mean, that's huge.
Yeah, that is. I mean, and that's. I mean, that's just the NFP. There's not much more to say than that. I mean, it's a combination actually. And that's something we will come on to because we're gonna wrap this up with a conversation about tariffs. And I think to
Yes.
answer his question is both what we're looking at now is Trump has announced these huge tariffs today. They're going to be set in stone. And we've kind of got this double whammy into the markets today of this really weak NFP showing true underlying weakness in the United States, much worse than people expected. And on top of it, coming into a real concrete high tariff world,
Yeah.
creating a lot of uncertainty. So yeah, futures are going to be down. Everything's going to be down. I mean, we're kind of lucky it's a Friday afternoon because we could be looking at a market rout over the next couple of days. But
Mm.
hopefully now the weekend will give some time for people to breathe, relax,
Yeah.
take stock, and on Monday we might see some more reasoned responses. But yeah,
Yeah.
expect everything to be down today, except for gold,
Mm.
for the gold bugs out there.
Yes.
Yeah,
And we were just looking at gold being down just now.
yeah.
Sorry, Chris, I've just got another two comments I just want
Mm.
to acknowledge. So Joe says, hello, Chris and Alison. I'm watching from Haiti.
Hi there, Joe.
Um, yeah, nice to have you here. Thank you, Joe. And then Marlon says, very cool, Joe. I'm watching from Sweden. Thanks, Marlon.
Thanks, Marlon. Nice to have you guys on board today.
Very nice.
Um, yeah, on this one of the a crazy end, one of the craziest weeks in the market that we've had for a long time. But yeah, should we
Sorry.
get? Yeah, go on, Alison. Go ahead.
There was one more comment. I didn't want to ignore Eric here. So Eric actually signed signed in to watch our live stream. I think he's trying to. He probably wants to see how I'm doing.
Oh, Eric, my
Yes,
usual live stream
your
partner.
usual, yeah.
What's he? Is he offering criticism of your live stream, Alison?
Probably. But he didn't put it in the question. He said, how long can Jay Powell actually be in his position? So I think that's
Yeah, I mean,
a good question. I mean,
this is the big. This is. I mean, after today, I mean, it's going to give Trump so much firepower. It's the amount of pressure. Again, you've got to be aware that there's these big bondholders who will not want to see Jay Powell removed, even after what you can call a mistake like this today, which is a pretty serious one. They will not want him removed, and it's not really about Jay Powell. It's about the principle of the independence of the Fed.
mm,
So, but and again, this is Trump, and this is not just Trump. This is Trump 2.0. I would not place any money on Jay Powell being in office in September. I really wouldn't. Um, I think the pressure on him is going to be very, very high at the moment.
mhm. Yeah, especially
Whether,
today.
yeah, So to answer your question, I don't know, but it could be in a normal world. He would be there, and I would confidently say he would be there until May.
Mm.
But this is not a normal
But
world.
we had this discussion actually with, oh goodness, my brain, Pepperstone.
Yeah.
And they were talking about, we were speaking to the analyst there, and he was actually saying that even if Powell didn't leave in May, that
Hmm.
we'd probably have a new name on the list anyway, and that could derail markets.
Yeah.
Just them knowing who it might be,
Yeah.
if they don't have confidence in whoever it is.
And that is one way. That is one way that Trump could lay pressure on Powell, is if he
Yeah,
named a replacement now in the next few weeks, someone who is friendly to the White House. Yeah, that would put huge political pressure on Jay
huge.
Powell. There's a
Yeah,
number of ways you can do it, and it makes what it does. It weakens, um, you know, people like PIMCO. It weakens their argument that they're to keep people like Powell and to keep Powell in place. But and to go back to the question about why Dow futures are down, I mentioned briefly there, it wasn't just the NFP. That's bad enough, but we've got something else going on today as well. Well, we've been going on for a week.
yes.
Um,
Europe,
Europe, well, I mean tariffs in general and trade deals.
which is a
So
very,
yeah,
yeah. Um, Yeah, so I guess if we go to, well, just kind of look at what happened with the European deal with Trump. We started
mm,
tariffs off at 30%.
mm,
And over the last while, there's been a lot of negotiating. Europe's got the second biggest economy in the world. So it makes a difference to America. And they have eventually decided on a 15% tariff,
mm,
um, which seems better, of course, than the 30% tariff, but we still saw the euro absolutely plummet
yeah,
thereafter. So I guess what it means is that, Europe, I mean, possibly they were hoping for something better and more reasonable, but it also it shows that Europe is probably in a very difficult position,
yeah,
and their growth has been limited. And of course, Trump also had a few other demands when he made the 15% deal. So he said he wanted 750 billion in energy purchases from the US. He wanted 600 billion in private sector led investment into the US, and then an unspecified but probably very big purchase of US military equipment.
yeah.
So he really laid it on very
It,
thick.
yeah, and so you cue a lot of articles like this, Europe's Summer of Humiliation.
Mm.
I've seen a lot of these this week, and also from not just from commentators, but from leaders in the EU as well, from leaders in Germany, leaders in France, even from the populist right, so leaders of Italy and Hungary, Orban, have all spoken out saying this is a bad deal, and that but at the end of the day, I think there is an understanding that Europe didn't really have a choice
Mm.
here.
Yeah,
Hence the humiliation
yeah.
here. And as you pointed out, traders looked at this and said, "Whoa, EU growth, which has been, pretty lackluster for a while now, is probably going to get hit pretty hard by these tariffs."
Yeah.
Um, and
Shame, it
hence we
just
saw this. Yep.
feels like Europe just hasn't had a break. I mean, from the German, you know, yeah,
Yeah. Yeah.
yeah.
First world problems, but no, Europe has not had a break. But yeah, so we saw this huge slide in the euro this week as traders digested this news. And then as we got closer and closer to the end of the week, and Trump administration's 1st of August deadline, traders started getting worried, because there's this acronym that's been floating around, right, which is TACO, right? And I think we've talked about this. Trump
Yes.
always chickens out. And traders going, is he actually going to follow through? Is he actually going to follow through? And he did. Trump
Yeah.
did follow through this time. He did not chicken out. And we have seen a huge range of tariffs announced today. Um, some much worse
Mm.
than we were expecting. So Brazil, for instance, who've who've caught Trump's ire in particular for what he sees as their political persecution of the former president, Bolsonaro. Canada, who he hasn't exactly had great relations with, unless you call wanting to annex Canada good relations. But because of their tacit support of a Palestinian state earlier this week, he's raised tariffs on them. And Switzerland, Alison, for some
I
reason,
know. So weird.
got slapped with 39% tariff. I mean, they're
Bizarre.
outraged. They're like, why? Why? What did we do?
Yeah. I mean, yeah.
What's
They
Trump got against the
Switzerland.
Swiss? But
Yeah.
also another really important point here is 20% for Taiwan. And they're one of the largest creators builders of semiconductor chips. So for the entire AI industry, 20% on Taiwan is a pretty big deal. So it's a good thing we got those earnings out of the week earlier. For these for the Magnificent Seven, because this 20% for Taiwan is going to be that's going to hurt. That's going to bite quite hard. And again, 25% for India. I mean, that's no joke. That's no joke.
30% for South Africa.
Yep.
But that's also because Ramaphosa wouldn't play the game.
Yes. So, I mean, this kind of begs the question now is like, where do we stand with tariffs? And so to go back to the comment we had earlier, about the futures going down, we're now looking at a weakening US economy. That's probably going to require some interest rate intervention in order to support it. We've also, we're seeing there's been underlying weakness in the United States US economy for a while. But now on top of it, we've got basically huge taxes on American consumers. Sure, companies are going to try and take as much as they can of this tariff weight, but at the end of the day, the consumer in the United States is going to end up footing the bill for a lot of these tariffs. So
Yeah,
the outlook is outlook's a bit scary.
it is. It's a bit grim.
So
Well,
what are your lessons from this, Alison? Where do we stand?
yeah, I mean, again, don't try and predict the market. I think that's very important. Don't try and predict if and when this crash is going to happen. I think just keep your position sizes small at the moment, and keep your just keep your risk low if you're going to be trading at the moment, because as you see, like the NFP happens, and don't trade around news announcements, please.
No.
You never know what's going to happen. It's just
Yeah,
it's too unpredictable.
it is.
Sorry, there's just one more comment from Edward Y of Oz, and he says, "My losses are getting smaller. I'm hoping to break even in a year or two." Well, congratulations, Edward. I think
Congratulations.
yeah, fantastic work. If you are able to trade in this environment, I take my hats off to you. It's brilliant, and
Yeah,
I'm
no,
sure you manage your risk.
yeah, exactly. And it's really good that you're seeing it in a positive way. Keeping your losses small. I mean, it's something that we talk about a lot, isn't it, Alison? That like a goal as a beginner here is just to survive. Don't chase those profits, especially not in a market like this. That's how you're going to lose your shirt and blow your account. Just survive and learn. And as crazy as these markets are right now, they're going to be anybody who's starting off coming into these markets. It's such a good learning experience. This is going to be a fantastic learning experience. But yeah, as you're saying, Alison, keep your positions sizes small.
Yeah,
And
I guess the one thing is if you can trade in this environment, you can trade in any environment.
if you can survive in this environment, you can trade
Yeah.
anywhere. So, but just briefly looking forward, I mean, obviously, look, we're going to see, I think, continued US dollar weakness now. Where stock markets are going to go, as I said, I think it's a good thing this is a Friday afternoon, and then we're going to have a breather over the weekend. How serious Trump is about these tariffs this time? These are all executive orders. Will they be repealed? Will any of them be, changed back? I mean, what's the future going to hold? If it stays this way, I think we're beginning to see what everybody has been warning about since Liberation Day in April, since these Trump tariffs were originally announced. I think we're probably, as you said at the beginning of this, Alison, we're going to start seeing the effects of tariffs into the global economy. Probably the beginning of a slowdown over the course of the next 18 months or so.
Yep. Agreed.
Yeah. Okay. And on that happy note, should we leave it there?
I think so. Yeah, thank you so much for joining us. If you enjoyed this, please give us a thumbs up and yeah, subscribe to our channel if you're not already.
Yeah. And Alison, when are we back for our podcast, Alison?
I think in two weeks.
Yeah, in a
Two
couple of
weeks we'll be
weeks.
back. Yeah.
We'll be back with our podcast. And then normal service will resume. We'll have Eric back for an August roundup at
Yeah.
the end of the month. Thank you so much. Have a
Thank
great
you.
weekend.
Thanks for having me. Yeah, you too.
Cheers then.
Bye.
Stream finished.